So do you feel stuck trying to grow your real estate portfolio? Like maybe you know that the way to do it is multifamily and maybe by raising capital perhaps from others, and you've tried to do it, but you struggled to do a deal. Now, if you want to scale your real estate portfolio, you can't just take your single family house mindset or tactics to multifamily. And there's probably one reason you're stuck. And in this video, I'm going to tell you what it is and how to get unstuck so that you can actually start scaling with apartments. Hey, my name is Michael Blanc, and I help people become financially free with real estate. So I flipped 3 dozen houses back in the day, and my frustration was that it's very difficult to scale. And then when I finally got into apartment buildings, I struggled with that one deal I did. It was a 12 unit in Washington, D.C. in 2011. And I made all kinds of mistakes with there, and largely because I didn't understand the true nature of scaling real estate. And I was doing it myself, and I wasn't leveraging a team, and I made all these errors because I was trying to do it myself, and that cost me time and money, and there was an opportunity cost because the deals, that one deal and the deals after were actually relatively small versus doing it another way, which is what I'm going to talk about here on this in this video. And the thing always is that we have a do-it-yourself mentality. And I have that because I'm very capable, right? But it doesn't, while it's okay on the single family house side, it's really does not suit you for scaling real estate. An example in business, for example, is, if you're a solopreneur and you have your own little business and something like that, there's only so large you can grow that company. There's going to be a limit to how much money you can make. But if you look at Elon Musk or Steve Jobs, in case of Musk's case, he built multiple multi-billion-dollar businesses. There's no way he's doing it on his own, right? He obviously does it by building a team. And that's what I want to talk to you about here today is if you want to scale real estate, you got to build a team. Team is everything. So here's what I mean. There's really three kinds of partners that you need on your team. And the first one is your team of professionals. You got to build a team of professionals around you. And again, on the single family house, it's not as necessary. Though having said that, I had a broker that I was getting deals from, or actually a couple brokers. I had a general contractor. But here what I'm talking about is I'm really talking about building a team of professionals around you so that you can leverage your track record. Because what happens, I can tell you from experience, when you call a broker or have a conversation with an investor, and they ask you, well, what's your track record? And you say, well, I've done a rental or two, but I've not done an apartment building before. That does not exude confidence, okay? Now the question is, how do you exude confidence if you don't have an apartment investing track record? Well, it's kind of a chicken egg problem. And most new investors throw up their hands and say, well, I don't know how to break into the business. Because I remember when I started calling brokers in 2006, these were brokers in Texas, and I had a rental and I'd done a flip at the time, so I felt myself fairly established. And the brokers didn't think so. In fact, they asked me for proof of funds before they would send me deals, and I was like, daggone it, I don't have proof of funds. And I was kind of stuck. And then literally months later, a year later, I discovered the secret, and that is building a team around you, right? So now when I call the brokers, I don't even wait for them to ask me what my track record is. I'm going to say, hey, my name is Michael Blanc. I'm a real estate investor. I work with some high net worth individuals. I'm working with Bill over at XYZ Property Manager, and he manages 5,000 units. Oh, yeah, Bill's a good guy. I've done a bunch of business with him, right? Yeah, and I'm working with Sam over at XYZ Lending. Oh, yeah, Sam's a great guy. Sam originated $1 billion of loans last year. And I might say, well, I'm working with an SEC attorney and a CPA, and maybe I have a business advisor on the team. And now you're talking about yourself in terms of your team, and you and your lack of track record never even comes up. And this is how you can overcome this apparent lack of experience and track record. And so you don't need 5 or 10 years of real estate investing experience. You literally need to learn how to build your professional team and then leverage your track record. Now, the second type of team member you need on your team is a partner. And this is because in a syndication, there are 2 types of roles. One is more the deal finder, and one is more the capital raiser. And there's typically one of these personalities, right? So if you're a deal finder personality, you're going to be more numbers oriented, more detail oriented. You're good at managing things. And if you're more of a capital raiser personality, the sight of a spreadsheet makes you, break out in a cold sweat. But you are able to speak to people. You're a relationship person. Maybe you have some kind of sales background, insurance, brokerage, things of that nature. Maybe you play golf. I don't know what other kind of stereotypes I can come up with. But you do resist the idea of analyzing deals because of you don't really love the numbers as much. the thing is, you need both of these roles in a syndication because both are important in a syndication. But that does not mean that you should do both. You should focus on one or the other, and a lot of it's driven by your personality. Even if you could do both, like I could do both because I'm so unbelievably accomplished, just because you can doesn't mean you should, okay? Because there's only limited time. Everybody who works with us, for example, they're doing this on the side while they have a demanding full-time job. And so if you have the 5 hours per week to get started in this business, right, would it be better to work to spend 5 hours just looking for deals and have someone else spend 5 hours just raising money? The answer is yes, right? Because if you spread yourself too thin, then you're not really going to get the result. So in our environment, it is very, very common, actually almost the norm rather than the exception, that we're going to put you together in some kind of joint venture partnership. Both deal finders and capital raisers, they have to learn the fundamentals of multifamily investing, right? So a deal finder has to learn how to raise capital. In fact, they should try to raise capital. But in a business, they're not going to be accountable for raising capital. Same thing for the capital raiser. They should know how to underwrite deals so they can explain it to their investors. They should know how due diligence works to explain it to their investors. They should know all these things. That doesn't mean that they do them or are accountable for that business, for that side of the business, right? So this new mindset of joint venturing is new. It's not something that you have in single family house investing, but it's actually huge if you want to scale real estate, because joint venturing helps you overcome something you don't have. And it could be a personality type, as we're talking about here. It also could be something like capital, right? Because if you're a deal finder, what you have, your strength is deal flow, but you maybe don't have capital. Well, the capital raiser has the exact opposite problem. I could have access to $1 gazillion, but if I never can find a deal, I'm never going to be able to do a deal myself. So they need each other. But what this does is it really focuses your networking risk. So if you know you're more of a deal finder personality, then start networking more with capital raiser personalities and vice versa. So again, building your team of professionals is absolutely important to not only overcome your lack of experience, right, but also do things like help you analyze deals, help you get loans, and that kind of thing. The second thing is to overcome what you don't have, you got to get into joint venturing. That's the second component of the secret to scaling your real estate is to build your team. And the third one is really working with experienced people around you in some capacity or another. And this is a major mistake I made in my first deal. I got into a little bit of accident in 2011. I got it from one of my wholesalers because I flipped 3 dozen houses and I got a lot of deals, yes, from some brokers, but also from wholesalers. And he brought me this 12 unit in Washington, D.C. And because I took this commercial real estate class back in 2006, and I actually, as I said, I talked to some brokers and developed a little bit of a spreadsheet that's now known as the syndicated deal analyzer. I did some stuff back in 2006. And so I felt like, and then I'd flipped at this point, almost probably just 20 houses at this point. I felt like I could do it myself. And I was wrong. And let me tell you at least 3 mistakes I can remember. One is I bought in Washington, D.C., which is not this is a problem because a mentor who was experienced investing in that area would have advised me against it. Why? Because Washington, D.C. is very pro-tenant. Now, I didn't know what that meant, but it's not good. It leads me to problem number 1. Once I closed on this deal, I had what's called a professional tenant. And those are the kind of tenants that not only not pay rent, but they know the law and they leverage the law to the hilt. In fact, I would say take advantage of it, and because they can, because of the pro-tenant laws in the district. So they weren't paying the rent, and it was very difficult to get them out, very difficult to evict in D.C., so that was a problem. But worse, he was also suing me every 6 weeks for the same dozen made-up stuff. And I know that it was made up because they were all basically dismissed, but every time I had to go into court, I had to pay an attorney thousands of dollars to defend me. And then I did have some fines and things of that nature as well. So and a mentor would have said, okay, Michael, if you insist on buying in D.C., then you got to look at the legal history of these tenants because it was a Class C type property, which I did not do, and I would have discovered that he had been doing the same thing with the previous owner, which may have been a reason the previous owner was selling. Okay, mistake number 3, which exasperated the problem, is I had the wrong property manager in place. Okay, this means that the property manager I had in place could not deal with Section 8 properties like this, couldn't deal with the housing authority, couldn't deal with this kind of tenant. And it made there was no end in sight. I kept going to court, kept costing money. I was running out of money. Finally, I realized, I don't know how to realize this. Maybe someone said something, I don't know. But a mentor or advisor would have said, hey, Michael, If you're going to buy this building, then you got to put a proper manager in place that has experience running these Section 8 houses. So once I did that, within three months, everything was taken care of within 3 months. The tenant was out, everything stabilized, the relationship with the fines stopped flowing. The problem is at that point I had run out of money for all this crap I was going through, and I was never able to complete my construction budget. It all ended well because the market obviously went up in this time. That's great, but from an operational perspective, it was a complete nightmare. Now, the good news, after about 18 months of this nightmare, this property started generating $1,500 per month in cash and passive income. And that's kind of, for me, when the light bulb went off and I stopped flipping houses and I started pivoting more to multifamily. The point I'm trying to make here, back into building your team to scale, don't do this alone. Okay? Do not have a do-it-yourself mentality. It may be okay on the housing, on the single-family house side, even though I would argue against it also. But you can get away with it. When you get into these larger deals that have more zeros, the mistake you can make can be so big that it literally takes you out of the business, and that's bad. But there's an even higher cost, besides the mistakes and the money it'll cost you, is the time it takes for you to solve these problems. Why reinvent the wheel exactly? Like, if someone's already done this before, why don't you just leverage their experience? Why you have to try everything, experience everything yourself and through trial and error? It makes no sense. Again, I was an engineer, software engineer, so I figured I was smart, which I was, and I could figure everything out myself. Again, just because you can doesn't mean you should. In fact, so if you can find someone who's done what you've done, then go ahead and leverage that person, and you can network yourself to that kind of person, or you may have to pay for that kind of person. Either way, make sure you don't do this on your own, because the difference can be significant, right? If you work with a more experienced person, not only will that person push your comfort zone, okay, but they'll also help you prevent big mistakes. For example, one big key here is walking away from a deal. When you know how to walk away from a deal, and do you have the discipline yourself to walk away from the deal after you already put money into the deal and time into the deal, right? So someone more experienced will give you a better, more experienced perspective. So there you have it. There's really the secret to scaling real estate is your team. And you really want to, when you put your team together, you want to put 3 people on that. You want to build a team of professionals like we talked about, and that's largely to actually help you do the deal done and manage it, but more importantly in the beginning, so you can leverage your track record so you don't need your own. Number 2, to leverage your team, is to put a joint venture partner in your business right from the start, knowing if you're more of a deal finder and you need a capital raiser, or if you're more of a capital raiser and you need more of a deal finder. And then the third one, don't do this on your own. Find someone more experienced that you can put on your advisory board, for example. So if you're ready to start investing and you want to get going with this and you're ready to start building your team and scaling, then I'd like to be your advisor. I'd like to be that component, that experienced advisor. And this is really what we specialize in. We help specialize in helping people scale their real estate. And we'd love to be that advisor on your team, because that's what we do really well. We take people either from a flip or two, or rental or two, or no real estate at all, and getting them scaling with apartments. And in fact, we're one of the only training companies in the world that actually guarantees success. If you don't close a deal in the first 12 months, we'll continue working with you until you do. So in order to explore that further, I want you to book a call with one of our Dealmaker advisors, and they're going to walk you through the Dealmaker journey and give you an action plan to get started. And so to explore whether you're a fit for a program, then click that link. It's probably below in the description or somewhere in this video. Wherever you walk, and look for that thing and just click that link and schedule a call. It's going to be a relatively short call. On that call, we're going to see if you're a fit based on what your experience has been and what your goals are. And if we can help you, then we'll outline an action plan to help you get there. So hopefully that was useful, and I will catch you next time.